Okay everyone, welcome back. So in this video, I'm going to be going over a specific trade I took Friday the 5th of December using order flow and footprint charts, right? So I managed to catch some of the longs, right? As price went from about 68.90 to about 6,900, right? So we're just going to be going over this from TradingView to begin with, right? So these were the key levels that I had. And I want to make this video, the first part of this video, a basic way for people to understand how I find my key levels, because I get a lot of questions about this. So I'm going to break this down, right? So if you trade S&P 500 futures in their London or the New York session, right? So anywhere around the world, whether you're US, UK, Australia, Canada, Malaysia, Dubai, any of these countries, you need to have a sound understanding of key levels, right? Because you can trade in the London and the New York session, right? London, New York session, American session. You can trade at any time if you know where your key levels are, right? So all these reactions that we had, I mean, this price action this week was pretty horrible, right? So I took a loss here. I took another L somewhere around here, right? I personally was not a fan of the price action at all. So I'm just going to be going over the one trade I thought was decent from this week, right? So this was about a 1R or 1.2R trade that I took on the 5th of December on Friday. Now, the question I get the most is, why was this my key level? So I'm just going to make the chart a little bit easier for people to understand. I'm going to get rid of this key level, this one here. So what makes a key level, right? So I want to go back to this specific day over here, right? So this was the 12th of November. Now, on the 12th of November, we're just going to be breaking this down. So there's a couple of things I look for when it comes to finding a key level, right? So let's just break this down. So here on Wednesday the 12th, there's a reason I'm going back to this specific day, right? So what we had over here was, of course, our Asian range. So this was our Asian range. Now, when I look for key levels, I look for a 15-minute FVG, right? Or a 15-minute imbalance or a 15-minute fair value gap. So how I do that specifically is like this. I want to see some kind of an AMD model, right? So I want to see Asia accumulate like this, right? Then I want to see London manipulate. Then I want to catch some kind of a distribution in New York, right? So that's basically what I'm doing every single day. I'm looking to catch a piece of the distribution in the New York session, right? So the American New York session is EST, so that's going to be 9:30 a.m. to 11, maximum 11:30, but I'm usually done by 11 a.m. Eastern. So I'm only looking to trade the first 1 to 2 hours. So once you have the Asian session like this, right, I'm looking for a manipulation above the Asian session, right? So I'm looking for some kind of a manipulation here. I want to see a sweep of the Asian high, right? And now from here, this is what I want every trader to zoom into, right? I use fair value gaps a little bit differently to most people, but the concept of a fair value gap is exactly the same. Now, a fair value gap for me would be how the top of this candle and the top of this candle don't meet, right? So this would be my FVG like this. So let me just do that. So this would be my fair value gap, just right there, right? That's my FVG. There's obviously a gap here, right? That's your imbalance on the 15-minute. Now I will choose the candle before the 15-minute, and I will mark this as my zone, right? So if you have a wick, I would just include the wick, right? That's no big deal. You can just include the wick. So this is my key level. So I get a lot of questions about how I define my key levels. Now, if you can define your key levels and you can plan your key levels before the New York session begins, so that's 9:30 Eastern or 2:30 p.m. in the United Kingdom in England, if you can plan your sessions beforehand, right, with the levels, it makes the sessions way easier, in my opinion. So this was a trade which I caught on the 12th of November, and I want to break this level down, right, because this is the level that ultimately held on the 5th of December, so a lot more recently, right? So I caught a short roughly in this, yeah, there you go. This was the short that I caught that day, right? So I caught a piece of the short. I didn't catch the entire move. I caught some of it, so probably down to whatever it was here or something, right? But what I want to go through specifically is this price action here, right? So this was a key level that I took. This was a story that I took on the 12th of November. Now, this here defines my key level, right? This is my key level. So the reason this is a key level is because we had the following sequence, right? So from an order flow perspective, we had the following sequence, right? We had aggressive buyers, right, which equated to no reward. And that means that sellers were passive, right? So think about this. that means that sellers were passive, right? So from an order flow perspective, this is a key level because we know that there are limit orders resting over here, right? There are sell limit orders resting here, right? So so this entire price action was basically a key level. So think about what the word key level actually means, right? A key level is defined as a level which has limit orders resting. So this is the definition I want people to take away. A key level, obviously from an order flow perspective, it means aggressive buyers had no reward. So we were able to break below, then we retested with these aggressive buyers and the market continued to tank. Meaning that aggressive buyers failed, there was no reward. That means sellers were passive. Now, if we take this one step further, if we extrapolate this out, when sellers are passive, right, that means that their limit orders resting over here. And this is the definition of a key level. Right, so whenever you're coming to your charts, you don't just trade off any 15-minute fair value gap. You don't just trade off any order block or any breaker or any of these other ICT concepts, right? You want to pay attention to where the key levels are. And we define key levels as where limit orders are resting, right? So how do you know where limit orders are resting? Well, you have to go through this sequence. You want to see aggressive buyers with no reward, and that means that sellers were passive, which means that there were sell limit orders resting here. So this is about 68.90 to 68, call it 80, right? Or 82. So this was how I derived my key level. So I took a trade on that day, and this was where passive sellers were sitting. Now, why is this important? Why have I gone all the way back to this day, right? So yes, from an ICT perspective, we had our typical accumulation, manipulation, then I caught some of the distribution, right? So this is that AMD model. But from an order flow perspective, which is what's actually more important, right? You don't want to be relying on these ICT concepts that much, right? You just want to take the fair value gap. Now, what's interesting now is this level I'm still paying attention to, right? So this is the question I often get. I took a short here, right? So what that means is this is an area of supply. I'm just going to write that here as well. This is an area of supply. Now, a supply zone just means that sellers are in control at that zone, right? So there are limit orders resting here. So when you use the term key level, I feel a lot of people, they just throw the word key level out there. A key level has a specific meaning. The meaning and the definition of a key level is simply where limit orders are resting. It can be buy limit orders, it can be sell limit orders. A key level is where limit orders are resting. That is all you need to know, right? A key level is where limit orders are resting. Now, what is interesting here? So this was obviously November the 12th. Now, I'm just going to replay price a little bit, right? So now we came into this level, right? So this is the confusion that people have, right? This is the confusion. So we were obviously, it was post Thanksgiving. I thought this week was extremely choppy. I personally didn't like this week, but when we break it down, right? When we break this level down, this is what's interesting. So on the 12th, this held as an area of supply, right? So this here is a supply, right? So we only tapped into this level again here. So this is now the 5th of December, so 3 weeks later. So price engineered a supply, right? Price gave us a supply zone. I know that from Wednesday the 12th. Now going all the way to here, right? When we come into this zone, right, this is a key level because there were limit orders. And if there's one thing you want to keep in your brain, or two things, right? Let's break this down. You want to get into the habit of just drawing these zones to the right? So this was an area of supply from Wednesday, whatever this was. This is Wednesday and then Thursday as well, the 12th of November, right? 11th, the 12th and 13th, right? So when we come back into this supply, right, what you want to understand, this is 68.80 to 68.90. So what you want to understand is when we come into this zone, is it going to hold as supply or is it going to hold as demand? Now, the two things I want you to take away from this video is this, right? The first thing is this. The first thing to understand is this, right? The market will move to limit orders, right? The market will move to where there are limit orders. So we know that there are limit orders here between 68.80 and 68.90. Now we know that. Now the second thing is this, right? Number two. The market will gravitate to limit orders and it's your job to know where the limit orders are, right? So plan your levels. plan your levels. And how did we define a level earlier, right? Levels are where there are limit orders, right? I'm just going to write this: levels equal limit orders, right? Just remember it that way. Levels equal limit orders. Now, these two things, when you can understand them, and it takes different people different times to understand this, but when you can understand that the market will move to limit orders, and these limit orders are actually the key levels you're looking for, if you can understand that, that's going to clarify your trading a lot, in my opinion. So let's break this down. So that's the most common question I get. So when we come into this price action here, right, so at this supply zone, there's only one of two things that can happen, right? So I was anticipating price to come into this level. In fact, I think we hit this level pre-market, I think, and I managed to catch some of this move, not all of it. I closed at about 1R, I think. But looking at this from just from an order flow, just from a non-order flow perspective, right? So my plan for this key level was somewhere here. I'm just trying to find it. Here we go. So here was the plan, right? So S&P levels, right? So it wasn't a very good week, very rangy price action, right? But this is what we're looking at, right? So this is my key level. So I had these key levels defined before the market opened. That's 14.24 in the UK. So that's 9:30 in the United States in EST. We're looking at this level and we're looking at this level. And I'm saying if we can break above this level, right, then we're going long. If we break below this level, then I will go short, right? Same with here. Break above this level, I go long. Break below this level, I go short. So I already have my levels predefined before the market even opens. That is the best way you can plan your sessions. So when we go now to the charts over here, of course, we're now going to go to the London session. And then, of course, we had New York open somewhere around here, right? So here's where there we go. So here's where we had New York session. So this is where we start to break down the order flow. So I get tons of questions about this, right? So this is how I want you to think about your trading, right? So there's three steps. The first step is you need a key level, right? So the key level we define as basically where to trade from, right? The next thing you need to know what to look for. So buyers and sellers, right? So this is what to look for, right? And the last thing you're looking for is why. You need to know why you are trading. So specifically, are you at an area of supply or demand? And we call this absorption. And we're gonna talk about what this term absorption means. And the way we determine absorption is by footprint charts, right? So we use the footprint charts to determine these three things. So you need to know where to trade from, what to look for, and why you're looking for it. So we've already got our first zone over here, right? So we've already got our first where. So this is our first tag into key level. That's step one. Step two now and step three often go together. We want to know why the market's rallied up from this region, right? So this is 68.80, 68.90. So now from here, this is where the order flow does come into play, right? So I wasn't looking for a short over here, right? I was not looking for any potential shorts. Now, the reason for that is because I like to see two taps, right? This is our first tap into the zone. This was now our second tap. So for me to see a short, price would have to break below the zone, retest the zone, and then I would short, right? So I didn't really get the shorting criteria, unfortunately, which is fine. That's not a problem. Now from here, we begin to break above our zone, right? So we had our first break above the zone. We peaked our head above the zone, and now we really peak above the zone here, right? So think about what this means. So we already established, right? If we go all the way back to the 12th of November, this was our level. So if this is our level, right? This was our previous supply level. So when price came into this supply zone, we broke off initially. This was the 12th of November. So when we come back into this level, we can either go short or go long. Now, how you determine whether to go short or long is where the order flow comes into play. So let's break this down. Now, this is where we go to our footprint charts. Now, on the footprint charts, we kind of break things down. So step by step, let's break this down, right? So I get lots of questions about this. So when price first tags into my level, I never trade the first tap. But what I am looking to see specifically is only the price action in the level. So this is now 68.90 down to about 68.80, 81 area. So what we can see is a lot of blue delta. So for those who don't know, let's quickly break this down step by step. we have 16 for 0, right? 10 for 142. So the left number is the bid and the right number is the ask. And so when you have the bid and the bid is the aggressive sellers and the ask is the aggressive buyers. Now the bid represents the total number of contracts hitting to sell at that price. So at 68.86, there were no contracts going in for the bid and there were 16 contracts for the buy. So I don't read all the numbers and I don't recommend reading all the numbers, but what I do focus on is the delta. Now the delta is the difference between the right and the left number. So for example, if you have a blue delta here, this row here at 6886.25, shaded in blue. So the delta here is 142 minus 10. That's 132. So when you have a positive delta, what that means is that there are more aggressive buyers than aggressive sellers. Right? And the same thing happened here, and the same thing happened here, and the same thing happened here, and then of course we sold off, right? And then the aggressive sellers step in. So I'm not looking to trade the first tap. Now for me, the first tap is invalidated until we get our second tap. So when price gave the second tap, we couldn't really sustain lower prices below this zone. So I'm looking at 86.80, 86.90, right? And I'm thinking, okay, we've broken above the zone. Now, what's important to understand, if we go back here, at no point do we know what's happening between buyers and sellers just by looking at this, right? But we can take a few things, right? From here, we only know we've broken above our zone. So we've broken above the zone here. So what I often do, the way I like to enter is like this, right? I want to see where the price is broken and I look for a retest. So I'm looking to see how price reacted here specifically, because this is our break and retest. So break and retest looks like this, right? We want to see price breaking above the level, giving a retest, and then we look to long, right? So my entry for this specific trade was, if I find it, my entry today was 68.92, right? 68.92. So this is my entry over here, 68.92.2, so it's around here. I had my stops below this region here, so I was comfortable to put my stops here, and I was able to only capitalize about 1R, not even, probably 1.3R, something like that. My trade management wasn't good, but the trade itself was a good trade. It was good to get one win under my belt, despite the losses I took this week on ES, right? So what we want to focus on when it comes to taking this trade, we want to see this sort of price action. So we want to see what's going on here, and we want to see what's going on here, right? So these are the lows as price was absorbing sellers, right? Absorption. Then, of course, we break above the zone. So breaking above the zone is the final confirmation that we want to look for. Now, specifically here, what was going on inside of this region, right? So this price here, so right in the middle of the zone. So this is now 68.86 to about 86.89. So this is where the footprint charts come and help us. So here we see aggressive buyers, the market moves down. So we know there's obviously a passive seller that's sitting over here because this was an absorption of buyers, right? Aggressive buyers hitting the footprint charts, right? So the market here broke lower despite having aggressive buyers. So when we come back and show up in this region, those same aggressive buyers show up, right? The same way they were showing up here before 10 a.m. Eastern or 3 p.m. in the UK, they were showing up over here. Now, what happened this time is we broke above the zone. And this is critical to understand, right? So we knew, I've been through this before, we knew that all the way from the 12th, we were coming to a supply area. So this time, the market breaks above the supply. So what's going on here? Supply has broken. Supply has failed. Now, as the market's moving higher, we saw aggressive sellers failing too, right? We saw aggressive sellers failing. Now, how we knew that specifically was through the footprint charts, right? So here we saw a lot of aggressive buyers here, here, here. We had sellers over here. Now, this was the candle that gave me a lot of confirmation. And I want to break this candle down. It's a doji candle, right? But obviously the shape of the candle doesn't matter so much, right? We're interested in the order flow. Now, here, let's just break this down again. So if we just break this down. So this candle corresponded to here, right? So this was an absorption candle, right? I call this an absorption candle. So this candle was the same, right? So this candle was all this region here. So once again, if we bring that this way, yeah, so what we're looking at 68.85, 68.82, right? So what we can see is these numbers here, very telling, right? 348 for 83, 152 for 0, right? Massive negative delta, right? Massive absorption, right? But the market was still able to move higher, right? Absorption of sellers, we move higher, right? Now this was the break. Now we're looking at the retest, right? Same thing with the retest over here. If you're looking for a retest, right, a retest has to be a rejection of sellers. So when you come into a key level, what you're looking for specifically is the rejection of aggressive sellers, right? This is what confirms the flip from supply to demand. So now what we have is this. What we can see is the market rejected sellers and then we broke to the upside. So I'm looking to see this. I'm looking to see the market reward buyers, right? And the way the market rewards buyers is by basically failing, right? The sellers have to fail. The aggressive sellers have to fail, right? And that's exactly what we had over here, right? So here and here specifically in the level, right? Aggressive sellers were failing. So the way you want to look at this is when you come into any sort of level, and this could be an ICT breaker, a fair value gap, an order block, it could be absolutely anything, support, resistance, supply and demand. None of these concepts mean much unless you pair it with order flow. So what we're looking for, number one, is a key level, right? So we tag into a key level, and this is where it gets interesting. Inside your key level, you want to look for buyers and sellers. Now, specifically in this region, you're looking for aggressive sellers to fail. So I'm just going to write AGG, aggressive sellers to fail. And when these aggressive sellers fail, we call this an absorption, right? Absorption of sellers, right? Absorption of sellers means that buyers are in control, right? That's literally what it means, right? Key level, we have to tag into a key level. We're looking for an absorption of sellers, right? Which means that buyers are in control, right? And that is why the longs played out. And I was only able to catch a bit of this move because the move wasn't very big, right? So another few ways you can think about this. If you're someone who wants to take a lower risk reward, so I do prefer taking lower risk rewards. I find it a little bit better for my psychology. You can have your stop loss below the zone, and you can simply target a 1-to-1, right? I think this trade did go 1-to-1, I believe, right? So just about, yep, 1-to-1. So if you struggle with psychology or anything like that, just go for a basic 1-to-1, right? You don't need to go more than that. A 1-to-1 with the correct absorption, right? A 1-to-1 with the correct read on order flow tells you everything you need to know, right? You don't need to go for high risk rewards at all, right? So you can catch a piece of this move by understanding the fact that aggressive sellers were failing to break above the zone.